There have only been two periods since 1971 where the Dow Jones Industrial Average was down 7 days in a row and the Nasdaq was up over 1%. Dow's down 3% over the last 8 days. Nasdaq's up 1%.
Right, but we have to think about what the fundamental drivers are behind that. Typically, the reason why they are somewhat correlated with one another is because they're both being driven by U.S. domestic growth. Today, what's driving and what's the Nasdaq is continued good growth here in the U.S. on the domestic shores, but concerns about increasing trade tension, which is really weighing on the Dow right now. So I think that's why you're seeing this divergence. My view is that the growth is still good, that the real reflection of what's happening in the economy is being shown up in the IWM right now in the Russell 2000. That's where you've got to look for your signs about how the market's pricing in the domestic economy. But right now, it's really trade tensions which are weighing on the Dow.
Yeah, Joe, is this where we want to keep placing our bets?
Well,
in tech?
Yeah, we keep having this conversation, and I would offer the thing to do is, if technology is what has taken us higher, the easy thing to do is look inside the options market where volatility is incredibly low and just reach out, as I have in the past couple of days, buy some QQQ puts, protect against the downside, because this divergence is as wide as we have seen in many, many years. And I think one of the conditions that is the catalyst for it is $650 billion this year will be allocated towards buybacks, 26% of actual cash spending. How much of that is being driven right now in the appreciation for technology? I would argue a lot of that. You're going to come into a blackout window. So something has to give in this divergence. And I think the potential for the Nasdaq to potentially retreat is there in a blackout window ahead of earnings.
Oh, you do? You agree with that, Steve? You think this divergence is going to end?
Well, I think it's always going to end. The question is how long can it go on for? And I think it can go on for a while. So you're betting, will the rest of the market catch up to Nasdaq?
I mean, this is where the action is, right? Let's not forget as well.
And it's going to continue to be.
You know, biotech's part of the story we're talking about. We're not just talking about FANG stocks and chips.
It is.
And all these other
and again, I'm not calling for it to end. What I'm saying is buybacks have been a significant contributor here in the last couple of weeks to the Nasdaq rally.
Without a doubt.
You're now coming into the blackout window. Something in that divergence could correct itself. The wise thing to do is protect yourself on the Nasdaq side.
So, Katie Stockton, I mean, how does how the charts look? I mean, you're pretty bullish based on what you see, right?
I'm very bullish, but in the very near term, of course, we do have an extended condition in those benchmarks that are tech-driven, you know, Nasdaq and otherwise, and also the Russell 2000 looks a bit overextended here. So I think that gap in the very near term will narrow with a pullback in those benchmarks, and that really would be very healthy from a longer-term perspective.
Only if you get those, Steve, something to pick up the slack. I mean, if you're going to have the front runners in the race all of a sudden get a bit of a cramp, who's going to come up from the rear and take over the lead?
Well, look, if the Wall Street Journal had a bunch of charts today showing what's occurred, what's the economic impact since the tax bill. And what it showed is that confidence is starting to peter out, resulting from the trade tensions. And I think you'll see those trade tensions continue through the midterm elections, because while we as investors are concerned with it, Middle America broadly, voters like the policy that Trump's putting forward.
They're about
so that's a great mandate. Well, I'm not sure. I think there's a long.
Why you say
think about the Daimler warning today. Okay, Daimler's out there saying that they're seeing effects on sales from the trade tension, and that absolutely flows through to GM and Ford. And you think about where the Make America Great heartland is, it certainly includes Michigan and Ohio, and the workers there who are going to be affected by shorter shifts and less money in their pocket if this trade tension, war, whatever you want to. Important segment to the political base of Trump. And I just want to finish this point. I think this will be resolved, this trade tension. I think it will be resolved at least 2 months before the midterm elections, i.e. quite soon, because they have to.
Your point, though, is that you don't think the broader market, however you want to characterize it, can start to catch up to the Nasdaq until some of the trade stuff gets settled?
That's exactly what I'm saying. And let's just think about the fact, all right? The S&P 500 has been basically stuck in a range for 5 months, roughly 2,600 on the downside, 2,800 to the upside. It's not going to break out of there. It's tried to. It's not going to break out of there until these trade tensions are resolved.
It's a bigger issue than that, though. It's a bigger issue. You've seen some downgrades recently, including today on some industrial stocks. Your preference is not to be in industrials. Goldman came out, their preference not to be industrials. So I think what strategists are looking at, what I'm looking at, is the end of a very, very long economic and market cycle. So I'm not sure the Dow's ever going to catch up.
By the
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.